Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, briefly, we're starting with the Asian stocks. They rose sharply on Wednesday, as of course confluence some factors including a stellar market debut from Japan Post, and of course unit in Tokyo and positive China data fueled risk appetite in the region. Looking at the Japan's Nikkei 225 index, it was one of the biggest gainers in Asia on Wednesday, up 1.3% thanks to the strong market by Japan Post Holdings and its two financial units. Elsewhere in Asia, the key Shanghai Composite Index closed up 4.3%, while of course the blue chip CSI 300 index surged 4.7%. In Hong Kong, the benchmark Hang Seng index pulled back from earlier highs, up 2% late on Wednesday. The dollar, however, firmed on Wednesday in line with higher US Treasury yields as a regional rally in equities whetted investors' appetite for risk. Against the yen, however, the dollar rose about 0.2% to 121.30, pulling away from Tuesday's low of 120.60. European equities are expected to open higher as well on Wednesday, with sentiment lifted by the rally in US and Asia markets. European investors will also be watching the oil markets closely after oil prices jumped around 3% on Tuesday's close. However, it was on the following news of a strike from oil workers in Brazil, one of the world's biggest oil producers. Following the euro as well, it actually dipped about 0.2% to 1.0939 after European Central Bank Mario Draghi, president, reiterated that further easing was on the table for December. Gold in the commodity sector steadied after a 5-day slide on Wednesday, but of course stayed within striking distance of a 4-week low, as of course investors positioned for US rate this year. Prices could remain under pressure from weak technicals and of course outflows from exchange-traded funds that have hit precious metals across the board. We're looking at the price of the gold. It had ticked slightly higher at 0.4% to 1121.80 an ounce in late Asian trade, but it was en route for the lowest overnight to 1114.10, its weakest since October. A breach in key technical levels could send prices even lower ahead of the US jobs report this week. That could be key in determining the timing of rate hike. All eyes will be on the US non-farm payrolls report due on Friday, while of course the ADP employment report and the ISM report on services sector sentiment due later on Tuesday could also be market movers. Assets in the SPDR Gold Trust, the top billion ETF, fell to 5-week low to 6.30 tons on Tuesday. Oil prices in the energy sector, as we mentioned, slipped in thin trading on Wednesday as investors took profit from the previous session's rally, although supply disruption in Brazil and Libya helped to limit those losses. US crude for December delivery dropped 11 cents to 47.79 a barrel after closing up $1.76 or 3.8% on Tuesday. It hit its highest since October 13 at 48.36. In today's calendar, we're looking at the ADP employment change at 13.15, ISM non-manufacturing PMI at 15. Along with that, there will be a testimony from the Fed Chair Janet Yellen, which is also an important market mover as she testifies before the Congress. That's all for today. Stay tuned on the important news. See you next time. Bye-bye.